World Bank estimates that Indonesia's 2020 economic growth will be in the range of -2 to -1.6% year-on-year. This projection is worse than the previous consensus, which was 0%.
The World Bank estimates that Indonesia's 2020 economic growth will be in the range of -2 to -1.6% year-on-year, which is the first negative growth in the last 2 decades. The latest forecast revises the previous World Bank forecast, which was 0%. The World Bank argued that Indonesia's economic contraction occurred because the handling of the pandemic in terms of health was not optimum. Chief economist for East Asia and Pacific World Bank Aditya Mato explained that the Indonesian government has not succeeded in overcoming the coronavirus pandemic. According to him, Indonesia is one of the countries in the Asia-Pacific region that has yet to show signs of economic recovery in the near future. He even said that the government's large-scale social restrictions or PSBB policy was less effective, so that it worsens the outlook for Indonesia's economic recovery. Meanwhile, in 2021 and 2022, the World Bank estimates that the Indonesian economy will go through a recovery process, even though it's still overshadowed by risks and challenges related to the successful handling of the COVID-19 pandemic. From all sources for IDX Channel.
Again, the World Bank trimmed Indonesia's economy forecast in 2020 and 2021. What are the main reasons beyond the latest forecast, and how should Indonesia respond to it? Let's talk about it through these following graphics. We're going to the first graphics. Well, this is the World Bank's forecast on East Asia and Pacific. The previous forecast on July 2020, World Bank forecast Indonesia economic growth in this year at 0.0%, while the latest forecast on October 2020, the economic growth of Indonesia in 2020 is predicted to only reach -1.6% to -2%, while in East Asia and Pacific, the growth in 2020 will only be at 0.9%, or the lowest since 1967, while the number of poor World Bank predicted in East Asia and Pacific will reach 38 million people. And responding to the World Bank's latest forecast, the head of Fiscal Policy Agency, Febrio Kacaribu, said that the World Bank's revised growth assumption was in line with what the government had calculated, while the latest government assessment estimated that Indonesia's economic growth will be in the range of -1.7% and -0.6%. The Fiscal Policy Agency stated that the World Bank assessed various factors due to the escalation of the COVID-19 pandemic, such as restrictions on mobility, increased health risk, and the weakening of the global economy had put pressure on domestic demand, both consumption and investment activities. Meanwhile, regarding forecasts in East Asia and the Pacific, the World Bank reported that the governments of countries in the East Asia and Pacific region have allocated an average of 5% of the value of their GDP to improve health systems, help households maintain their consumption, and help companies avoid bankruptcy. However, some countries have had difficulty extending their limited social protection programs, where previously they spent less than 1% of their GDP. And from 2020, what about the forecast for economic growth in 2021? And to get a clearer information, we're going to the next graphic. And for 2021 economic growth forecast for Southeast Asian countries, we can see in the graphic that Cambodia is predicted to only reach 3 up to 4.3% in 2021, while Indonesia only 3 up to 4.4%, and the Philippines, the economic growth in the next year only 2.9% up to 5.3%, and Malaysia is a little bit higher at 4.4% up to 6.3%, while Vietnam 4% up to 6.8%. So this is the lower growth and the upper growth of economic growth forecast from the World Bank for Southeast Asian countries. And viewers, from the graphic we can see that the upper limit of Indonesia's economic growth in 2021 is only slightly higher than Cambodia, while when compared to the Philippines, Malaysia, and Vietnam, the upper limit of Indonesia's economic growth is quite low, And regarding this, Chief Economist of East Asia and Pacific from the World Bank, Aditya Mato, say that Indonesia's economic growth projection this year and next year depends on controlling the spread of COVID-19 and accelerating the availability of vaccines. However, in 2021 and 2022, the World Bank estimates that the Indonesian economy will go through a recovery process, even though it's still overshadowed by risks and challenges related to the successful handling of the COVID-19 pandemic. The estimated economic growth in the 3% up to 4.4% range takes into account the impact of a low baseline, as well as a reduction in potential growth of minus 0.6 percentage points compared to pre-pandemic conditions. And in order to accelerate economic recovery, the World Bank provides a number of suggestions or advice for Indonesia. What are those? Let's move on to the next graphic. And this is the advice for Indonesia to recover from recession from the World Bank. The first one is increase capacity to prevent the spread of COVID-19. And the second one is starting fiscal reform. And the third one is expansion of social protection. And World Bank give advice for Indonesia to support companies in order to prevent bankruptcy and unemployment, while this last one is strengthen reforms in the trade sector. So in order to accelerate economic recovery, the World Bank suggested that Indonesia should not rely solely on domestic market forces. Accelerated economic recovery is considered possible if the government carries out structural reforms in the trade sector. And in addition, government policy support has not reached many companies. Business Pulse survey data shows that only a small proportion of companies receive direct support from the government. The share varies greatly by country, where Indonesia itself is still less than 10%, while in the Philippines and Vietnam it reached 20%. And in particular, formal financial institutions may not reach many SMEs, as they are mostly informal and micro enterprises, which are not part of the tax or financial system. And on the other hand, the central bank or Bank Indonesia has recorded buying government bonds directly. However, this move actually raises market concerns about the erosion of the independence of the central bank that has been hard-built. So as World Bank has issued forecasts for Indonesia in 2021, how is the target of Indonesia's economy in the next year in the state budget? Let's check through the next graphic. So the government and the House of Representatives have agreed the key number in Indonesia 2021 state budget. The first one is GDP growth, which is set at 5% in the next year, while average consumer price index or inflation is set at 3%, while rupiah per US dollar at 14.600 per dollar per US dollar, and 10-year bond yield 7.29%, and the state revenue is targeted to reach 1,743.6 trillion, and the state spending 2,750 trillion, while budget deficit for the next year is set at 5.7% of GDP. And viewers, Finance Minister Sri Mulyani Indrawati ensured that the government would continue to maintain a credible and accountable fiscal policy in order to support economic recovery and sustainable growth. And in addition, the government is targeting an open unemployment rate in the range of 7.7% to 9.1%, and a poverty rate of 9.2% to 9.7% in the 2021 state budget. It is lower than the government's projection this year, using the toughest scenario of the impact of the COVID-19 pandemic. And in response to this, core economist Yusuf Rendi estimates that unemployment will fall next year, but will be contributed by the increase in workforce in the informal sector. Many workers affected by layoffs this year will switch to the informal sector, such as online taxi riders or even small business and trading and so on. He estimates that their average income will decline, and then it will become a challenge in achieving the poverty level target next year. And viewers, support from all parties is needed in the process of economic recovery. But of course, the role of the government must be optimized in order to achieve the economic recovery and the targets that have been set. So stay tuned with us. Market Headlines will be right back after this quick break.